All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, December 16th, 2021. Markets close in about a half an hour here, fading all the way off the highs. You can tell here on the triple Qs, we are actually just barely above where we had that FOMC pump from yesterday. So we've faded back all those gains. Apple actually trading lower than yesterday's low here. Take a look at Apple. By the way, huge winner on Verizon today. We'll talk about that in a second. But take a look at Apple here, and bearish engulfing candle. Semiconductors bearish engulfing candle. So tech giving back all those gains, but we did take a winner here on Verizon. We had call options, took about 14% on that. We were underwater on this trade for a little while, but the patience paid off. And, I talked about this, last couple, well, really the last week or so. Stocks that get beat down into OPEX often get a bid, and Verizon put in a low on Monday, and it was just all up. Look at that daily candle. That is massive. This probably gaps up to 53 bucks, maybe even that 100 moving average tomorrow, and then it will probably fade back to about 52.50. That's where the straddle is on the call options and puts there. You can see 15,800, 15,900. So there's a straddle right there. They close it right on there tomorrow. That will probably be likely. Speaking of straddles, look at Apple here, and look at if we look at the chain here on Apple. Check out the open interest on the call side and look at the volume. Look at all of these pikers that are going to be bag holders tomorrow that were buying calls. Apple gapped up this morning and oh yeah, Apple's going back to all-time highs. Here we go. Yeah. Well, you got to know the OPEX game, and that's just what it comes down to. All these people are getting absolutely burned. Institutions are bagging premium today. And really just across the board, take a look at NVIDIA, down 6.5% almost. Look at that gap up, all sorts of retail call buying. AMD way off the highs, almost engulfing there. You've got, Amazon, all these big names, big tech names, Tesla down 4.5%. So, you don't want to let OPEX, and I see this every single month, and you'd think that people would learn by now, but, it never fails. You can't let sentiment be changed during OPEX week, especially during a quad witch and, after the FOMC. The sky was falling yesterday at about 1:30 p.m. And then by 4 p.m., all-time highs, going back to all-time highs. And then today, gap up. And then what happens? Boom, huge move down in the spiders, getting a little bit of a relief bounce off of this 100 MA here. And you see the VIX not really bidding up that much today. Having a decent day, but this is an old OPEX trick as well. What they do is they'll sell the VIX, sell VXX or whatever instrument that they need to use to get the VIX futures lower, and they'll sell big tech, or they'll sell whatever stocks they need at the same time. And essentially what that does is it burns out the call premium that they need to burn out, so they're burning out all this call premium, but they're also selling the VIX at the same time so that the markets don't freak out and crash, because they don't want to crash. They just want stocks to go lower. So does that make sense, hopefully, to everyone? By the way, so we talked about weakness. Now we'll see what happens tomorrow. My guess, we probably have a choppy kind of sideways day. We'll see where they pin it. Maybe we pin it to 468. If we look on the SPY here, that was a major level, 468. It would not surprise me if we closed right there, maybe 470 even. So that's also a major level. My guess is somewhere in between that. Maybe if they want it lower, it would be 464. So there's some support there. That's kind of where, I would say around those three areas would be where we close tomorrow on the SPY. But I don't expect a whole lot of action tomorrow, at least as far as movements are concerned. But this is why you can't let, you can't change your sentiment on a day-to-day basis unless a major level gets taken out and you say, okay, now I'm wrong. That's different. But I see the sentiment flip just so crazy, so bullish here, so bearish right here, all bullish right here, and then bearish. And you can't let that happen to you. That's how the institutions win. And that's what they do. They try to frustrate and confuse, the majority of, market participants, and you can't let that happen. Otherwise, you're never going to make money in this game. But anyways, let's look across the board. So a lot of pigs getting stuck here today. Look at the fat that being trimmed off of this pig. You guys know I can't stand this stock SE, just the valuation here, but a lot of fat being trimmed off of this pig. Same thing with Crocs. This is another one of those stocks that we talked about here. Look at Crocs coming in down 7% today. It is holding kind of. You could make a case that there's a trend line here. They might actually have some support here. Yeah, breaking through that trend line there. So if it closes below that trend line, you could make, I would say by tomorrow, you could make a case for the trend is being broken. We have to see what it looks like on the weekly tomorrow. But, all these high flyers, look at that reversal closing below that green bar. So this is a weak name right now. But all these high flyers finally starting to come in. SE, Crocs, NVIDIA, Tesla, we talked about. Apple, still a strong name, but look at that reversal there. So we got to watch the semis. I've been saying this for a couple of weeks now. The semis will tell you when this market is ready to top out. Let's take a look at the triple Qs. Again, this trend line has been king. This upper trend line is been king, and I've been going with that ever since. Let's take a look back at the MACD because that's something we've been watching. Yep. So again, there's your divergence, and this is why we shorted up here. I mean, it's until this is proven wrong. I'm going to continue going with it, and MACD curling back down on the triple Qs now. Now we'll see where we close tomorrow. This market may hold up. We do have holidays next week, so seasonality is a thing, obviously. I don't know if we necessarily get that Santa rally, though, this year. We do have some major cycles coming into play next week, and obviously the patrons will get that before anybody. But in any case, let's take a look at a few other sectors, and we'll wrap it up here. IWM also soft, so it is off of yesterday's low still, but you want to see a better bounce off of that yellow trend line that we talked about yesterday. That's a big trend line going back many years, all the way back to 2011. And the IWM is still extended. Look how extended it is from its 28-month moving average. So this can come in. I ultimately think it's going back to 195, maybe 196, 197. 200 handle. You got this gap here at 200 as well. So I think IWM's ultimately coming down there. Doesn't mean it can't get a little bit of a relief rally in the near term, but this is not showing strength right now. Let's take a look at yields here. So the 10-year is a little bit weaker today, but the 30-year is still showing strength. And I said yesterday it's odd that Apple and NVIDIA and AMD were just ripping higher, while the TBT also rips higher. So maybe these tech stocks finally coming back to reality, but ultimately it's kind of just OPEX games in my book. So we'll have to see how things look tomorrow and really into next week. That'll be, once we have OPEX out of the way, that'll kind of be the truth. By the way, Dow actually flat. So again, risk off. The safer stocks are playing out. I mean, we talked about Verizon. Look at that monster bid on Verizon. So the safer names are bidding better. Coca-Cola, Pepsi, Procter Gamble. The safe names are getting bids here, and the tech stocks are soft again. So this has been a trend lately. And I said tech was going to top out probably before everything else, and that has been the case so far. So we're going to continue to go with that until proven otherwise. Let's look at gold. So gold getting a nice bid. I said this little breakdown might have been a bear trap. It looks like it was. Getting a nice bid now, trying to reclaim that trend line. And, I mean, short term, if it can close above this weekly high here at 1811, then maybe it can go up and test this 1850 area. But again, still ultimately gold just kind of in a choppy range. Not really much to do with it, but near term it is showing strength. Also, silver getting a nice bid off a double bottom. This looked a little trappy as well. So silver needs to close above this area, about 2260, and then maybe you can attack 2306. So that would be kind of your next area. Maybe you get up to this 2350 area with this 50 and 100 moving average in the near term. Let's look at the dollar. So dollar continuing to pull back. Again, ultimately nothing wrong with this pattern. Dollar just strong move up, and now just consolidating the gains. Again, this probably chops into year end, but after that it can really push higher to attack that 98 handle perhaps. Financials finally showing some strength. So we talked about financials and how they were weak, but look at this. So you have, I'll have to do a little bit of work on this, but you have that ABC up pattern starting to play out on the XLF. I think your max upside's probably about 40. You got this gap fill here, but I'd have to do some numbers on that. But I think, yeah, you probably get up to 40 bucks, and then you're going to run into some major resistance. JP Morgan finally getting a bid, but we talked about how soft this one was recently. Look at how it is underperforming the XLF there. So that is not a good look. That is a leading financial stock. You do not want to see JP Morgan and Goldman Sachs underperforming, not even be able to take out these recent highs. So that is something we got to keep an eye on. Broker dealers also fading. They were up pretty nicely today, but fading pretty significantly off the highs as well. Dow Transports, Now fading to red. Also, Dow transports were up pretty nicely as well today, and they're fading off the highs. That is being led lower by airlines. So airlines have just been very weak. There's a lot of negative news here with the airline stocks. Look at the Jets, just can't get a bid, can't get out of its own way. But we do have the rails kind of bringing up the rear here. CSX up 0.5%, Norfolk Southern up almost 1% there, UPS up 1.5%, and FedEx. Well, FedEx flat was green earlier, but deliveries and rails are sort of helping the transports out there. Anyways, in the near term, let's take a look here back at the spiders. Markets close in about 20-25 minutes, getting a bid here. If it can get above this red bar, it probably goes up to 470, 469 in that area into the close. But in any case, we'll see what they do tomorrow, and we'll have to watch the open Monday, and we'll see what if the light volume kicks in. If that's the case, markets can probably hold up, but we do have some major cycle convergence going on next week, so just be on guard for that. Anyways, you guys take care. I will talk to you all tomorrow, and have a great rest of your Thursday.